So when we're doing product costing, we might have to talk about some theory. And I guess what the theory is essentially asking is, why should a business use product costing? So what are we talking about? Well, we're saying some expenses will become product costs. So why are these products being sold for these prices? So go out and buy a bottle of Coke for $4, new Samsung Galaxy 1500 whatever, pair of shoes, $250, PS5, 800. Those they might be the prices in the real world, but the point is, why do businesses charge that amount? And there's millions of reasons. I guess some are, what is the popularity of the inventory? What is the competition charge? And for us, most importantly, what is the cost to make or buy this inventory? Now, in business management, we might consider something like the popularity and the competition, but for accounting, the one we need to consider is, what is the cost of the inventory to either make it or buy it? And that is what's going to help us determine the actual price that we sell the inventory for. So let's take an example. Let's say we're Rebel Sport. We sell these Nike shoes for $250. So we say the selling price is $250. And let's say Nike charges us to buy $150 per unit. So we go, oh, we're going to make a profit of $100 per unit. So the business is running, the accountant that's running the business says these shoes cost our business $150, and when we sell them for $250, we make a profit of $100. Pretty simple. But what about if this happens? So we're still Rebel here for $250, we're selling these shoes, but then a competitor comes in called JD Sports, and they're selling them for $180. Well, what we can remember is that we can lower the selling price to match it, so we can compete with JD Sports, and we go, oh, okay, we'll just lower the price to $180. They only cost us $150 to buy from Nike, so we're still going to make a profit of $30. It's not as good as it was, but at least we're still making a profit, and sometimes you have to do that. You have to lower prices and reduce your profits in order to compete with competitors. So the business says to itself, these shoes cost our business $150. If we lower the price to $180, we'll still make a profit of $30 per unit. And that all makes sense. However, that's not factoring in product costing. Product costing is really important. That product costs are the cost to get all inventory in a condition and location ready for sale that can be allocated to each unit. So maybe for these shoes, there's a bunch of product costs we didn't factor in. Obviously, there's the cost to buy them. That would be the purchase cost. So that would be a product cost. But maybe to get these shoes imported from Asia, we get freight inwards from Asia, $20 per unit. So really, we can't sell these shoes without incurring that. It's $20 per unit. That's actually part of the cost. There's freight in of $20. Also, customs duty. We can't get them from Asia on a ship unless they come through customs. So that should go in there too. Customs duty of $10 per unit. And maybe we get the ship and the delivery insured in case there's a problem of $5 per unit of every shoe that we buy. So that should go in too. So hopefully what we've learned with product costing is the cost of the shoe isn't the purchase price. That's $150. The cost of the shoe is its product cost. All the costs incurred to get inventory in a condition and location ready for sale, which was all of these, which can be allocated to each unit, which was all of these. So we really say the cost of that shoe is $185. And now we've got a problem because we're only selling them for $180. We thought we were making a profit of $30 because we thought they only cost us $150. That's not true. The product cost, or what we call the cost now, is $185 per unit. So every time we sell these shoes, we're not even making a profit. We're actually making a loss of $5 per unit. So what's really important to know there is that you need to know your product cost so you can tell what price to sell your inventory for. Because now we're going, hang on, these shoes cost our business $185, so if we sell them for $180, we're actually going to make a loss of $5 per unit. And that is why we really need to know the product cost of things. So by knowing the product cost of inventory, let's just get back to our theory. What do we fulfill? We fulfill a qualitative characteristic called faithful representation. How so? Well, by having the product cost, this means the business has the actual real-world cost of the inventory. So the value of inventory in the balance sheet is complete, it's accurate, and it actually reflects reality. So the real cost of those Nike shoes wasn't $150. That doesn't reflect reality. It was $185. And we only could fulfill faithful representation if we had that product cost. I think most importantly though, product costing fulfills relevance, which is all about being able to make effective decisions about the business. So by having the product cost, we can make effective decisions about each model of inventory, such as, do we even make a profit on the inventory? How much to sell the product for? I think that's probably the most important decision. We can't get that right unless we know its actual product cost. But There's a whole bunch of other decisions that we can make based on knowing the product cost, such as how many units do we need to sell to break even? How many units do we need to sell to make a certain level of profit? Are we selling the right products? And are we buying from the right suppliers? And we can only answer all of these questions and make really good decisions if we have the product cost. Lastly, I guess we could say product cost helps us also fulfill one of the accounting assumptions called accrual basis. How so? Well, having the product cost means the business has the actual expense incurred in getting inventory in a condition and location ready for sale. So without knowing the product cost, we actually don't know the expense of that inventory. So we need to know that. Why? So we can correctly determine our net profit as the revenues earned from the inventory minus the expenses incurred in buying and selling the inventory. And now we have a bit of a theoretical basis as to why we should do product costing. So if you get asked why, and it says use an accounting assumption to back up your answer, we'll use accrual basis. Maybe you get asked why, and it says can you give us a qualitative characteristic, or we could use faithful representation or relevance.